Good morning, it's Monday the 13th of September and welcome to Atlantic Capital Markets roundup of the coming week's economic highlights to keep an eye out for. As always, we'll give you a quick summary of the macro data points from around the world to expect over the week, and we'll then dig into more detail on some of the bigger stories straight afterwards, so stay tuned. So let's take a look at the economic numbers being issued this week. And starting today, we have the EU construction PMI figures, the German factory orders. On Tuesday, we have the UK unemployment figures, US CPI, and we'll be discussing both of these in detail shortly. And on Wednesday, it's a big day in China when we'll be hearing their industrial production figures, the retail sales figures, and their unemployment figures. Over here in the UK, the CPI figures, the Eurozone industrial production, and in the US industrial production figures and the EIA crude oil inventories. On Thursday, we'll get the latest Eurozone trade balance. Over in the US, their retail sales, and we'll talk more about those in a moment. And again in the US, the initial jobless claims. On Friday, the UK retail sales figures, which we'll discuss shortly in more detail. The Eurozone CPI final numbers, and the US Michigan consumer confidence numbers. And also this week, the companies that'll be reporting include on Monday, Associated British Food, and do stay tuned for more detail about ABF shortly. On Tuesday, JD Sports and Ocado. And again, we'll talk more shortly about these two. On Wednesday, Fever-Tree, and again more detail coming up on Fever-Tree shortly. The restaurant group Tullow Oil and Redrow. On Thursday, we'll be hearing from Ashtead, Kia Group, THG and Hilton Food Group. So last week, central banks were the main focus after the ECB, BOC and the RBA meetings. Now, the outcomes of the meetings were broadly as the market expected, leaving investors searching for fresh clues as to when those central banks will taper again or start to taper bond purchases. There's plenty of data to help trades position for the next central bank moves this week, including both the UK and US CPI figures, the retail sales from both the US and the UK, in addition to a deluge of data from China on Wednesday. So let's take a look at some of those key stories in detail. So a trading statement from AB Foods is due pre-close today. Now, as Primark stores reopened post-lockdown, fashion fans rapidly returned, allowing the fashion retailer to more than recover the £1.1 billion which pandemic closures slashed from its revenue in just 16 weeks. Sales are 3% higher than they were in 2019. The further easing of COVID restrictions in August, with no restrictions on numbers allowed in the shop, could see revenues lifted further. As far as groceries are concerned, this unit of the business has been resilient, although sales are likely to have eased slightly from the lockdown surge. On Tuesday, we'll hear the latest UK unemployment figures. Now, the unemployment rate in the 3 months to June declined to 4.7%, and it's expected to decline to 4.6% in the 3 months to July. Meanwhile, the ILO claimant count is also expected to tick lower after falling to 5.7% in July, as it continues to trend lower from 7.2% in March. As the UK economy reopened, the labour market improved. However, the furlough scheme has been masking the true picture of that labour market. Now, as the furlough scheme winds down and companies have to contribute more to furloughed employees, the claimant count could of course start to rise. That said, the BOE is much more upbeat regarding the outlook of the labour market than it was at the start of the year. The BOE unemployment forecast has been downgraded several times, most recently from 5.2% to 4.7%. And as a result, keep an eye on the pound and of course the FTSE. Over in the US, whilst PPI rose in July, CPI actually eased. However, 1 month does not constitute a new trend, so it's still a little premature to call that top on inflation. US CPI was 5.4% and core CPI eased to 4.3%. PPI inflation has continued to rise, and this often trickles down to consumer prices, so it wouldn't be unreasonable to assume that consumer inflation could in fact rise higher. Even so, expectations are for CPI to remain steady. That said, a hot report could be the catalyst for the Fed to consider tapering bond purchases sooner. So do keep an eye on the US dollar and US indices. And also on Tuesday, we'll be hearing from Ocado. Now, Ocado's share price has had a particularly tough 2021 so far. The stock sits amongst the top 10 worst performing FTSE 100 firms this year. However, panning out, this puts the share price at roughly where it was at the start of 2020, before the pandemic. Its online platform drove sales higher through the pandemic, and its successful partnership with Marks & Spencer still has potential to expand. Now, this partnership helped boost sales by 19.8% to £1.22 billion last year. And Ocado has also continued to invest in the automation part of the business through acquisitions of Kindred Systems and Haddington Dynamic last year, followed by an investment in Oxbotica this year. Now, these investments in technology are likely to be key for turbocharging growth. In H1, Ocado reported a 21.4% rise in revenues to £1.3 billion, and pre-tax losses narrowed to £23.6 million. New fulfillment centres at Andover, which is reopening, and Purfleet could lift performance in the second half of the year. Oh, and finally, on Tuesday, JD Sports updates the market with interim results. Now, investors will be eyeing the numbers for confirmation that trading momentum continues since the further easing of those pandemic restrictions. Expectations are for solid numbers on both sides of the Atlantic as consumers spend their stimulus checks. The update comes following a ruling that JD Sports must sell Foot Asylum just 2 years after the acquisition, a hit to its quest for dominance in the sportswear market. Now, whilst shoppers returning to stores will have helped lift sales in-store, online sales will also be closely eyed, particularly as competitors such as Nike ramp up their online offering. So expectations are high after heavy investment into e-commerce. We'll be hearing from Fevertree on Wednesday, and thanks to the reopening of bars and restaurants across the globe, Fevertree is looking to deliver very solid year-on-year growth. Whilst at-home drinks kept sales ticking over across the pandemic, on-trade sales is where there's a higher margin. The US market has experienced notably strong growth, which has caught investors' attention, given that Fevertree has never really enjoyed a very strong position across the pond. Margins will be in focus as input cost prices are on the rise and amid investment in growth. So as a result, profits could of course take a hit. On Thursday, we'll be hearing the latest US retail sales figures. Now, retail sales are notoriously volatile, and this has been the case more so than usual this year. In June, expectations were for a decline in sales, which then actually rose. The volatility surrounding this macro data point highlights the patchy nature of the recovery in consumption. Whilst holiday and theme parks reopening over the summer will of course have boosted sales, rising Delta COVID cases and falling consumer confidence will have hurt sales. Sales declined by 1.1% in July, and given that consumer confidence plunged in August, there is a good chance that sales will remain weak. Furthermore, the fact that US non-farm payrolls were also considerably weaker in August could add to the negativity surrounding sales. Add into the picture rising prices, and it's easy to see why this may be another month of declining retail sales. So finally on Friday, we'll be hearing the latest UK retail sales figures. Now, UK retail sales slowed in July as pent-up demand waned and as consumers shifted their spending away from retail and towards services as the economy continued to reopen post-pandemic. For example, food sales fell as restaurants reopened. And with this in mind, the unexpectedly sharp decline in retail sales in July could well be temporary. As with retail sales in the US, this is a volatile macro data point which has become more volatile since the pandemic. Whilst COVID cases were also starting to rise at this time, with more people asking to isolate, interestingly, spending in hospitality venues didn't come under pressure. And this suggests that Delta hasn't triggered a major shift in consumer spending yet. Staycation spending and summer holiday spending could well boost retail sales in August, despite pingdom. Expectations are for a 1% rebound this month. So, to wrap up, let's take a look at the dividends for this week. In the FTSE 100, we'll be hearing from Intertek Group. In the FTSE 250, we'll hear from 888 Holdings, Dunelm Group, HG Capital Trust, Serco Group and Unite Group. So, that's what to look out for this coming week, and we hope, of course, it's a good one for you. And don't forget to look out for our rundown every Friday morning, where we take a look at what's happened in the markets over the week with our own thoughts and analysis. So, until Friday, from all of us at Atlantic Capital Markets, have yourself a great week.